The deals are out there today. We're in a market cycle. I always say, hey, there's no geniuses, there's just a market cycle. And what part of the cycle are you playing in? But whether we're going up or we're going down, you can make money.
30 plus years in real estate investments. He's controlled over $400 million in real estate transactions. He's an entrepreneur, author, real estate trainer, public speaker, personal coach, and so much more. Michael Morawski.
I think one of my superpowers is the ability to go learn what I need to learn so that I can do it, so I can help other people do it as well.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling your business and compounding your wealth starts every day with a mindset of stewardship over ownership and applying billionaire principles. Our ultimate goal, to help you scale and compound your wealth so you can give more or all of it away for maximum impact. I'm your host today, Brett Swartz. In every episode, we feature some of the world's top entrepreneurs, millionaires and billionaires. They share their principles, values, secrets, and wisdom, providing each of us with the insights we need to reach the next level of success and impact. I'm excited about our next guest today. He's out of the state of California, 30 plus years in real estate investments. He's controlled over $400 million in real estate transactions. He's an entrepreneur, author, real estate trainer, public speaker, personal coach, and so much more. He's a CIO of a multifamily hedge fund. Today, we're talking about all things multifamily investing. Please welcome to the show with me, Michael Morawski. Michael, how are we doing?
I'm great, Brett. How are you? Good to see you again.
Great to see you. Yeah, I was just on Mike's podcast yesterday, and so we're doing a little swap here. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, so as you mentioned, Brett, I've been in the business 30 years. Started out as a residential sales agent, and I came from a construction background. I had a construction company outside of Chicago, and was building about 25 room additions a year, and just burned out. Entrepreneurial. As an entrepreneur, you do everything in business. You write contracts, go on sales, do the marketing, hire people, fire people, do the bookkeeping, and I was still in the field banging nails. And I just got to a point where I was done. And so decided to sell my company. I had somebody knocking on the door to buy my company, and sold it, and was going to take a year off. And when I took that year off, like any entrepreneur, you stay busy. And I found a couple of two flats to uh, fix and flip. And along the way, met a real estate agent who was really successful, and got talking to him about the real estate business, decided to become a real estate agent, and put a team together. And I sold, over 100 houses a year for about 12, 15 years, and went in the apartment business in 2005, and found my passion, that's for sure. Absolutely love the multifamily business. Love helping other people be successful in the multifamily business, and whether they're learning the business themselves or investing in multifamily. I loved what you said at the beginning, millions to billions, but, serving others, right? And that's really what I like to do. Two major missions in what we do is, one is provide safe and secure housing for our tenants. And the second is to provide above average, stable returns that with a preservation of our investors' capital into the deals that we bring to the market.
Fantastic. And by the way, if you want to learn more about Mike Morawski, you can go to MikeMorawski.com, MikeMorawski.com. Very cool. Before we dive into all things multifamily investing, the current status of the marketplace, what Mike's seen out there in opportunities, interest rates, all of those things that we're going to be diving into today. Mike, I want to take one other step back. I believe you've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. Some people call them superpowers. I'm curious, growing up, what was Mike's superpower or gift, one or two of them that you maybe identified at a younger age or figured out at an older age, but ultimately, what are those gifts and how does that help how you help and bless people today?
Yeah, I think one of the gifts that I was given at an early age was to learn as much as I can about a number of different things that kind of all led to this place. You know, uh, when I was floundering from job to job, I remember my mom saying to me one time, "When are you going to get a real job, or when are you going to get a job that you're going to stick at?" And it wasn't but 6 months later, I went and opened a general contracting business because I had worked for a carpenter and a plumber and an electrician and a concrete guy and a mason and had learned learned a lot about a number of different disciplines that helped me start a company that, I grew very quickly. It's the same thing in real estate. I sold residential for a number of years and I thought, boy, this will be an easy transition to go from residential to the apartment business. But really quickly, Brett, I figured out as soon as somebody said to me cap rate and NOI, I was like, what are you talking about? And so I had to re-educate myself. So I think one of my superpowers is the ability to go learn what I need to learn so that I can do it and so I can help other people do it as well.
Wow, that's amazing. I love that. And with that in mind, let's talk about all things multifamily investing. So, right now, Mike, what's the number one secret to making sense of finding deals
Hmm.
that are cash flowing, that are, value add, or that, that are, worth buying? And maybe give us a couple examples.
Yeah, so that's a great question. The deals are out there today. We're in a market cycle. I always say, hey, there's no geniuses, there's just a market cycle. And what part of the cycle are you playing in? But whether we're going up or we're going down, you can make money. You just have to turn over more rocks and open more doors to find what you're looking for. And Brett, we're in a relationship business. This is strictly relationships, and you have to have relationships with brokers and wholesalers and other people that can bring you good on or off market deals to look at. We just went through a stint where we had underwritten 90 deals. Nothing made sense, nothing penciled. It was over $1 billion in underwriting that we did, but we had written 10 LOIs, had got to the final round on 7 of the 10, and the final round on 3 of those to walk away from deals because the seller wanted, 300,000 or 400,000 more than we were willing to pay, and they just didn't make sense. Then all of a sudden, a great deal showed up, something that was assumable, easy to purchase, and we were able to take down about 300 units after that. But you have to be willing to put the reps in. It's like going to the gym and lifting a weight. You're not going to see results day one, but you will see results over time. And it's the same thing in this business or any business for that matter. You have to be willing to do the work to gain the results.
Okay, awesome. I'm gonna pull out a couple of golden nuggets there, right? And it says there are no geniuses. Just what cycle are you in, right? You're gonna make money in the buy and the sell. You're gonna make money in high and the low, and as the market moves, you need to be getting the reps in. You got to build the relationships, brokers, wholesalers, on or off market opportunities. And wow, 90 deals, 10 LOIs, 7 out of 10, missed on the three, but it sounded like you had like a red light, like, don't push it. And then all of a sudden you get a green light. It's really simple. Assumable loan, good favorable terms on the debt, and you put the deal together. Can you tell us a little bit more about that deal? What was the debt? How long did it have fixed rate for? What was the interest rate, and what was
Yeah,
kind of the cap rate and such?
great question. Bought 300 units in Tulsa, Oklahoma last year, all under 4% debt. So we assumed interest rates that were below 4%, about 3.7 blended rate, and it was fixed rate debt. I think some of the struggles in the market today are because of different debt products out there, floating rate, bridge debt, notes that have come due, and it's caused a stress in the marketplace, right? We all know that. Do I think it's going to be disastrous? Absolutely not. But we were fortunate enough to find fixed rate debt that had about 8 years left on the deal. So we know we can run these deals for about 5 years, get them stabilized, increase the profitability, And if interest rates don't come down that are favorable for somebody to buy these, we know that we'll be able to exit the deals and somebody else assume this debt again. So we put ourselves in a position where we were able to secure property at good favorable financing
Yep.
and know that our exit plan five
Got it.
years down
What
the
was the
road.
price per unit on that one, Mike? Just curious on what'd you get it for?
Yeah, so 1970s product, we paid about 68,000 a door for some of that product. We paid between 55 and 68,000 a door for all that product.
Okay. And then what was the average rents?
Average rents in that market are under $700,
Okay.
growing. So we're taking average rents that were maybe 675 for a two bedroom, and
Mhm.
we're getting 900 today for them
Oh,
post
excellent. Okay, great. So it had
renovation.
some value add or some loss to lease there.
Yep.
And so you bought it about 68,000 on it looks like there's a mix there at 300 units, and so it was about $20 million. What was the debt that you assumed? What was the amount?
We've assumed about $15 million in
Okay.
debt.
Sweet. So I put about 5 million down and maybe raised a little bit more for from CapEx. And now
Yeah.
you're a year into it, you're still fixed at debt for another 7 years at least, and you're cash flowing, you're doing great.
Yeah. Well, I never say we're doing great because we can
Okay.
always do better, but where can we push the envelope, right? And
Good.
how do we create revenue? Because we all know, or should know, that for every dollar of NOI we add to a deal, we add, at a 6.5 cap, you're adding about $240 in value for every dollar of NOI you add. So how many $240 do I want to add to my NOI, right?
Oh, I love the way you broke that down. That's really nice. For every dollar of NOI at a 6.5 cap, you add $240 in value. And that could be on the expense savings too, right? It doesn't have to just be increasing the rent. If we can decrease the expenses, if we could increase the rent, if we can renegotiate with the insurance company, if we can get ratio utility billing system going and all of those other things, every single dollar equals $240 of value. Talk about how you implement that with property management, right? Because I think that's a key thing here because it's a $20 million deal. It's this big money, all this stuff. But you're really, if you get granular on this thing, every dollar of NOI is $240 of value. Walk us through that for a second.
Yeah, so great point you made. You can do it on either side of the line, right? You can either increase revenue or decrease expenses. Multifamily is a business, and that's why I like multifamily, because when I buy an apartment complex that already exists and I buy it below replacement cost and I buy it with some problems that I can turn around, I'm buying a broken business essentially. And I have the ability to turn that around. And I always look at it from both sides. What can I do to increase my revenue and decrease my expenses? Because that's really the perfect storm, Brett. You can have one or the other side, but if you have both of them that you are doing at the same time, you are really increasing value that is making your investors make more money on the back end. And really to kind of answer your question about the granularness of the management side, I believe that the deals today are made and broken at the asset management level. And you, as an operator, need to be watching your numbers. I have a 13-point checklist that we get on every week during stabilization with our property management team and our property management company, and we walk through those 13 points because we're looking at what's the occupancy, what's the traffic coming in the door, how many applications are we taking, how many of those are being approved, are we getting good quality applicants coming in. you know Brett, it's not just about raising your rent sometimes. I own a deal in Florida that we've raised the rents since takeover in 2021 about $550 per unit. But here's the question I ask today on asset management calls. I say, so how many of those tenants in the last 90 days that we signed at a $500 increase on the rent are still living there 90 days later and they're current on their rent? right? Because if I'm moving a tenant in that says, okay, I'll pay, 1,400, $1,500 in rent, but we get 90 days down